Hey everyone, me Kevin here. Why the heck is the stock market falling all of a sudden? We just had a 2-week run. We've had a lot of euphoria. Stocks have hit all-time new highs. Bitcoin has hit new highs. Everything has been going to the absolute moon with the exception of InsurTech, PayPal, and Pinterest. But don't worry about those. Those are smaller positions I might have. The larger positions have all literally gone to the moon. Affirm, Etsy, Enphase, Tesla, you name it, all of them have gone to the moon. This Saturday, I put $1,050,000 into that's $1,050,000. Such a weird word to say. Into a Bitcoin on Saturday at $61,800. It just hit all-time highs of $68,800. I put over $1 million into Voyager Digital at $12.30. I did take a little bit of profits, but with the $600,000 that I have left in it, we have now seen that almost double as Voyager Digital has gone almost up to $21 a share. There's been some insane euphoria. So what's going on, and why is it that all of a sudden the indices are turning red? Well, let's talk about this. But first, I want to give a quick shout out to those of you in my course member live streams. I appreciate talking to you every single day. This was a screenshot from actually today's course member live stream where Frank, a realtor, said yesterday in the live stream, the course member live stream, Kevin said, might be time to take some profits. Sold all my individual shares and then $sign because today the market is rotating to the downside a little bit. Now, obviously, Frank trading a little bit. I would never sell out of my entire position, but it's worth noting that if you're interested in having sort of a private dialogue on what's going on in the market and doing a Q&A back and forth, or just hearing some more detail on my thoughts or explaining myself a little bit more, check out the course link down below on Building Your Wealth, Stocks and Psychology of Money, or the other courses. Use that coupon code STOCKDOC, and I can write you a prescription for making money. Hopefully, not guaranteed and not financial advice. Link below. All right, folks. So why is the market slipping a little bit? Let's take a look here quickly at the indices so you can just get an idea. You've got volatility that went up almost to 6%. You've got the indices down 1/3 to 0.5%. Russell doing the worst. Russell was almost down a full 1%. Why is this happening? What is going on? Well, if you subscribe to the YouTube channel, which hopefully you do, you already know that I suggested there was a potential coming market crash catalyst. Now, some of the commentary here was from folks who are like, oh my gosh, Kevin, why are you always trying to talk about a market crash? The market's green, and here you are trying to make the market crash again. Yada, 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 yada. Like these random sort of miscellaneous comments. Fortunately, those comments were the minority, but they missed the point. And this is sometimes the stupidity that you see in miscellaneous corners of the internet. The best time to talk about the potential for a market crash is literally when the market is zooming. So that way you know what's happening when it's happening and you're not getting blindsided. Folks, I kid you not. You could watch this. This video was posted November 5th. That is 4 days ago. That was Friday. That's 2 trading days ago. Not Monday, but Friday. There's only 1 trading day in between that. And what I said in this video as the coming market crash catalyst was uncertainty regarding the Federal Reserve. If there's any indication that it's not Jerome Powell, the market was likely to sell off. Well, folks, I kid you not. I said this on Friday. I kid you not. This is the headline today. Biden meets with Powell, Brennard, at White House as he weighs Fed pick. And the fact that the president hasn't made a decision on central bank leadership, and the fact that he's interviewing somebody other than Powell, somebody that even if you don't like him, at least you know him. You know where he stands. You know his position on monetary policy, and you feel comfortable, well, maybe not, endorsing of, but you feel comfortable in knowing that you know where his head is, right? You have certainty in what Jerome Powell believes. Jerome Powell is very, very consistent. He's a centrist. He's not super far hawkish, and he's not super far dovish. He's a centrist. He has this, and this is like in monetary policy terms, not like left or right, like Democrat or Republican. Look, here's a quick summary of what he thinks. He believes that inflation is caused mostly by transitory forces. Now, transitory is lasting longer and it's larger than expected. We have inflation. We know this. We have big inflation right now. But once we get back to fixing our supply chains and manufacturing processes become more efficient, and all of a sudden we potentially have an oversupply of products, things that have been moving inflation up, like used cars, chips, clothing, whatever. These sort of like wedding dresses. I don't know why that one always comes up in inflationary issues or with inflationary issues, or even food. Some of these things might have the opportunity to come back down. This is what Jerome Powell believes. Jerome Powell believes that we're going to taper between now, here in November, all the way through about June, July of 2022. And then at that point, we'll have another 7 or 8 CPI reports between here and there. Of course, they use the PCE, not the CPI. Don't worry about it. It's a tiny minor difference. Very, very similar. PCI comes out like 2 or 3 weeks later. It's kind of annoying that it comes out so much later. But anyway, and then the Federal Reserve will determine whether or not to lift off or increase interest rates, which we expect interest rates could go up once in the second half of 2022. About 60% of market participants believe we're going to see rates go up in June of 2022. And then we're expecting 2 rate increases in 2023 and 3 rate increases in 2024 spread out. So that would get us back up to almost 2% for the Federal Reserve funds rate. So that's the expectation that we have at the moment. Now, if you throw in a new person in the mix, okay, well, how does this person think? What do we know about them? Well, it's actually kind of tough. If you go look at the history here, this is an older piece here from 2015, and it's worth noting that in 2015, she's listed here as a former Treasury Undersecretary for International Affairs in the Obama administration, has given relatively few public speeches. This is what I've noticed as well. Gives very few speeches. You go type into YouTube and you try to hear more from her, you don't get a lot of interviews from her. Of the interviews you have, most of them are dated, and then Bloomberg here says, from what we've heard, she's been fairly dovish. But in 2019, Reuters listed them all here as either doves or hawks, and you could see she's right here in the middle as listed as a centrist, along with Jerome Powell. But the potential problem with this is because she doesn't give a lot of speeches and because she's listed as a centrist, we have even less clarity on which way she actually leans. Look, if you have a hawk, it's obvious which way they're going to lean. They're going to go, let's raise rates right away. If you have a dove, let's wait, right? Or a dove. But anyway, when you have a centrist, it's like, oh, crap. They could go either way. We don't have a lot of interviews, and what we have instead is a lot of uncertainty. And that's what the market does not like, uncertainty. So when is Joe Biden going to actually pick so this uncertainty can end? My prediction, and yes, so far I was correct about my prediction that the next market pullback catalyst was going to be uncertainty around the Federal Reserve. It literally came within 2 days. I'm not trying to pat myself on the back. This is just what happens if you have your head in newspapers and market news every freaking day. You can oftentimes see things with I would say a more skewed likelihood of accuracy, right? I don't want to say that I have a crystal ball. I don't. But when we look at this and you look at sort of the way the market functions and you get good at doing this, you have a greater chance of being right more often. I'd say 70 to 80%, sometimes even 80 to 90% more likely to be correct than wrong, which is good because that helps you with your investments as well. And it's important to analyze and know what fear catalysts are so you know, is this a buy the dip opportunity or what? We'll talk about that in a moment. So, when? My expectation is that the CPI report comes out Wednesday. Then Joe Biden's going to break down this CPI report. Probably his staff is going to do that. I doubt he's going to read the report. They will finalize their discussions. I wouldn't be surprised if we end up getting some kind of answer on the Federal Reserve nomination by the end of the day on Friday. Part of me thinks that Joe Biden is kind of going in this direction of, let's potentially interview a centrist woman, because this has been a big priority for Joe Biden, is diversifying how many males we have in leadership positions and getting more women involved in higher positions. Remember, Treasury Secretary, woman, Janet Yellen, Kamala Harris, female VP, right? These are big things. And so it's not a surprise. I think legacy-wise, it's we've already had Janet Yellen as a woman chairperson, so I don't know if it's necessary. The market's reaction today could actually reiterate that Joe Biden should just stick with Powell. It wouldn't surprise me, but this I'm less confident in. It wouldn't surprise me if Joe Biden ends up, and I'd put like a 60% confidence on this. Wouldn't surprise me if Joe Biden interviewed her, but then it's like, just kidding, we're going to stick with Jay Powell for now. And, maybe next time, if I get reelected, you'll be the top contender at that time. But for now, we'll stick with Jay Powell, because of the market turmoil that we've seen after we discuss the potential for this shakeup, so to speak. So that's an expectation I have. I'm thinking by Friday we should know. I wouldn't be surprised if it's after market closes. If it's not by Friday, I think the market, and the market doesn't get an answer by Monday, the market's going to freak out a little bit more, and we could potentially see the buy the dip extend until Joe Biden responds. So if Joe Biden makes the decision soon, or maybe he accelerates his decision because he sees the market sort of rotating down, then obviously that would be a change. Keep in mind, when the stock market was going through its euphoric rally, there were a lot of thank you Brandons trending on things like Twitter, and a lot of them were saying, oh, thanks Joe Biden for the record stock market. Look, we know it's generally not presidents that are causing this. They have an impact, but the market cycles, in my opinion, are relatively independent of the presidency. But there are definitely pluses and minuses depending on that occur from presidencies because of uncertainties within their administration, right? Like when we had the budget deficit and debt ceiling crisis because Democrats couldn't figure out what the hell they wanted to do. That is a fear catalyst. And that leads to uncertainty in the market, and that's when you get buy the dip opportunity. So, am I buying this dip? We know that Tesla dipped a good chunk today. We see Lemonade, PayPal, Lucid, Affirm, a lot of companies dipping today. Am I buying the dip? No, not yet. This is not a dip for me to buy. I am very, very, very patient in this regard. I am also slightly in margin, about 2%. Not that big of a deal. If we got a serious dip, I'd be more than happy to pull from margin and go shopping, but numbers would have to be vastly different from where they are now. We're barely coming off all-time highs here, and it's way too early for me to buy the dip, although you all know that I am a buy the dipper. And if you want to get notifications for every single time I buy or sell something, not as instructions for what you to do, but just as ideas, check out the Stocks and Psychology of Money program link down below. Use that coupon code before the price goes up again. And folks, thank you for watching. Thank you for subscribing. Share the video if you found this helpful. And we'll see you in the next one. Thanks so much. Goodbye.